everyone, and thanks for tuning in to the Financial Investor channel. My name is Brent. Today we're going to be going over a stock screening of EPR, which is Entertainment Properties Trust. Now this will be a quick video, about 10 to 15 minutes hopefully, and it'll be a very quick screening process of the stock that I chose to add to my portfolio. All of these stocks here in the daily portfolio snapshot are ones that I own, and they are listed in the order that I bought them in Robinhood. So I went ahead and went to my resources page on my website, and at the very bottom here I created some resources here that I use that are completely free to use for everyone. So right off the bat, what is EPR? EPR Properties is Entertainment Properties Trust. It's a uniquely positioned triple net lease real estate investment trust. It's a REIT specializing in highly enduring segments of the real estate industry. It currently holds $6.2 billion total investments. It makes $556 million annualized adjusted NOI. It's located in 368 locations, and it has over 250 tenants in 43 states, DC, and Canada. So even if there's a recession in Canada or in the United States, they are able to endure because they have highly enduring segments. They're pretty spread out. So I'll have this link in the description below if you guys would like to check out this company. It does not mean in any way that I am telling you to go out and buy it. I just think the information is really useful to go out and read about it. Reading about certain stocks is a good way to learn about this is a REIT, so if you have other REITs that you're invested in, you can compare them and see which one is the best one. I think this one was really nice. It offered a lot of it met a lot of my rules that I like to follow here. So I'm going to go ahead and go down to the bottom of my resources page. I'm going to go ahead and open up Y charts, dividend.com, Fine and Chill, and I'm going to go ahead and open up Yahoo Finance. So those are the four ones that I'm going to be using today to screen my stock. So right off the bat here, I'm going to go ahead and enter the ticker symbol, which is EPR. And we can see for their 1 year, their yield is way the heck up here. It's almost at its highest point that it's ever been. A little bit over 5 point. Actually, it shows right about 5.49. But if we actually take a look at it on Google, what's it called? EPR Stock. We can see that its current dividend yield is 5.66%. Depending on the time of purchase, it may be higher if you purchase that at a lower point here. You can see that the 5-day it actually dipped quite a bit, and in the recent months, this is actually I would have liked to have bought this a little bit ago, but I wasn't really looking at this one specifically back in July 11th, 10th. But it's got really nice, been on a downwards trend for the year, but I'm not looking at it for the year. It does pay back a really nice yield, which we'll cover here. 5-year growth is what I'm looking at, out that 10-year growth, that really good long-term growth. I'm talking 15 to 30 years. This has gone up 268% since being out in the year 2000. You can see that during the recession of 2000, it didn't take much of a hit. You can see that it went from maybe a couple $13 to around $10, and then really quickly recovered very fast. The 2008 recession, it did take a chunk out of it, and it just now recovered here. Let's see here. It recovered in around December 2015. It looks like it maybe right there 2016, it looks like it finally had recovered. So if this does go into another recession, I may have to wait a couple years to get my money back if it does go down. But it does pay out a nice dividend yield. It has paid out dividend yields during recessions. It did have to cut them back slightly, but the yield was really nice for its actual return. So even if they cut their yield or their dividend payout back, the payout that they do pay out is well worth, even if they cut it, it's still higher than what others are paying out. And the fact that they've continued to pay out during recessions is good enough for me for this specific stock. I'm not following one of the rules where I'd like to see continued growth, and you know, it's not it is recession proof in a sense, but not completely. You can see that they're 3-year. For a 3-year, this is a semi-growth company. We took a look at the 5-year chart. They are on an upwards trend for 5 years at 58.25, and if I go 58.25 divided by 5 years, it's 11.65% return plus the yield that they pay back, 5.66, meaning about 17.31% back per year average. So the rule of 72 is 72 by 17. You're basically, if you were to invest your money into this long-term wise, you could see a return or double in your investment, say every 4.5 years, or maybe during a recession, a little bit longer. But even then, they have a nice payout, and you'll be able to buy their stock at a discount, increasing your payout. So let's go ahead and I mainly looked at the 1 year because it is an upwards trend. I like to catch it when it is on an upwards trend and the yield is greatly outweighing the current price, which is what caught my eye initially here. So next I go to dividend.com and I type in the ticker symbol here, EPR, and this is going to give me how much they pay out, their payout ratio, and their dividend growth, and their yield. So they're currently at a 5.66 yield. They pay out $4.08 per share. It's about 80% payout ratio. Now I normally don't dabble in stocks that pay out over 70%, but this is a REIT and they have to pay out over a certain percentage. I think it's 90%, 80 to 90%, so that they aren't taxed like tax crazy. They've had continued dividend growth for 6 years, so that's over 5 years, so that's pretty decent. I like to have dividend growth over 10 years just because I know that 10 years ago we had the 2008 recession and they continued growth through the recession, but this one only has 6, so they did cut back during the recession of 2008. We can see that their next ex-dividend date is on Thursday, so it's in 1 day, 36 minutes and 36 seconds. So if you guys see this video on Wednesday and decide, hey, this is a stock for me, and purchase or put some shares into it, you would make the ex-dividend date of Thursday. They would then pay you on August 15th. It's a payout type regular, so it's a regular scheduled payout, and they would pay you 34 cents a share. We can take a look here. A lot of this information is locked, but their annual growth for 2016 was 15.5% for their dividend growth, and they've had consecutive years of growth they've had 6 years of consecutive years of growth. Now coming down here, I like to take a look at the dividend payout history. Now you can see here that they only had 7 years of consecutive payout growth. So they started paying out dividends, growth dividends, back in what looks like 2013. So it says that they've had growth for 7 years, but this shows that they started paying out 26 cents in 2013, which is about 4 years ago. But prior to that, you can see that they had really good history through the 2000s. In the year 2000, they didn't stop paying out. They continued their dividend or their payout, and they continued growing it. And they did get to such a high point that in 2008, during the recession, they had to cut it back from 84 cents a share to 65 cents a share, which is not that big of a deal. You're still getting a crazy yield on your investment. And they did have to drop it in 2013, it looks like, from 79 cents to 26 cents. And they've continued to pay out dividends since that time. Really good steady payouts. This one is actually, let's see, what is it? It's paid monthly. So it is actually a monthly paying dividend. So if you're looking for a stock that pays out monthly, it pays out 34 cents every month, or per share every month. That's crazy. Let's see here. That's as much information. Down here you can see the company profile. Entertainment Properties Trust is a real estate investment trust. Let's see here. We're about 10 minutes. Let's continue. Let's just jump to Yahoo Financials and type in the ticker symbol. I don't want to take too long. This screening process, I did go through and read quite a bit more, but this is just a quick screening. This is just to show you, add a new stock to my portfolio, what are some areas that I screened for to kind of get me an idea, and then I did a deeper dive into reading about its company in the About page, where they're located at. Here in their portfolio you can see their map and what kind of entertainment centers that they currently hold, and you can take a look at all of that information. It's going to be in the description. But let's go ahead and jump quickly through this. We can see that their earnings, of course, are scheduled for August 3rd. They didn't meet their last quarter earnings, but they did meet 3 of their previous earnings. So their history is 75% good, 25% bad, but they were only off by a penny in their earnings. So here, let's see their yield, and not too much more information here. We could take a look at their beta. They're not too volatile, 0.7. Take a look at their statistics. Here I like to take a look at their forward PE of 20, so they're going to possibly maybe more profitable. We can see that they're forwarding, let's see, it doesn't show me what they're expected to be in the upcoming years. I know I saw that somewhere, what it's projected to be. I think it was projected to be in the $78 to $88 range in the next year, so I thought that was on this page, or maybe it's on another page that I had looked at. Anyway, some other areas that I like to look at here are held by insiders. So this isn't held by insiders, it's held by 2.14%. Anywhere between 2 to 10% is completely fine. I think anything around 40% is kind of a warning sign that it shouldn't be held by insiders so much, because they would have a higher stake in making decisions for the company that the institutions or the investors may not want. Held by institutions, it is held 97% by institutions, meaning that mutual funds and other companies such as Vanguard and other ones hold this in their specific portfolio, and they take advantage of this one. So it's considered good. It's actually in some institutions, a really high percentage of institutions' portfolio. We can take a look at their trailing 5-year average, which is 6.02. Now I don't get a 6.02 yield because this is a growing 5-year. It's been growing crazy, remember? So I'm not expecting to get a 6.02, but I take a look at the trailing annual yield of 5.43, and it's currently 5.55. So I do consider it undervalued for its current time in the 1-year period. So that's something that I took a look at. They have a little bit of, let's see here, let's go ahead, we can take a look at the actual balance sheet here in just a minute. So that's all there. Go into their financials, take a look at their income statement. They've had continued income since 2014, 15, and 16. As far as operating expenses, it has grown, but their operating income or loss has stayed above. Let's see here, their income, continued operations. Their overall net income has continued to grow over the last couple of years. If we switch it to quarterly, let's see, they did miss first quarter of 2017, so you can see that they didn't quite make as much revenue, and the cost of the revenue was actually higher than the average. They averaged around, say, 5,800, and they spent $63.50 on the cost to have that revenue, which drove their total revenue below what their gross profit would normally be at, and that drove the remainder of their net income below for that specific quarter, which is why they were off by a penny there. If they had actually reduced their cost of revenue, they wouldn't have shortchanged, they would have met their earnings. Taking a look at their balance sheet, areas here we like to look at is what kind of debt they have, what kind of investments they have. So they have good investments, property, plant, and equipment. Current liabilities, they do have some liabilities, but not too many. They do have $2 billion in long-term debt. Let's see here, but not too bad. Net tangible assets, 2.2 million overall. And let's see here, we could take a look at holders. So this is the breakdown of the institution. So it's 97, 99% held in institutions and mutual funds, so that's good. You can see that the current direct holders, you can see who they are and how many shares of the company that they own. So this is that 2% of the insider holdings, and you can see which institutions currently hold them. So there's quite a bit. Vanguard, of course, the Vanguard Group and the Vanguard Specialized REIT Index holds this specific REIT in its portfolio. And as far as that information goes, that's been a quick video. I don't want to make it too long. We're looking at 15 minutes and 30 seconds right now, so that was a very quick explanation of why I purchased EPR and added that to my portfolio. Of course, my portfolio is up to date on my website, and if you go to my website here and click on portfolio, you'll be able to view how many shares of it I purchased. And it won't show you, I don't believe, what the purchase. Yes, it does show you my purchase price, what price I purchased it. I purchased that $71.50. It's got a 5.71% annual yield, which is going to generate me $187.68. So that is it. We'll be covering Dine in the next video, or probably not the next one, but in an upcoming video. There's a couple other videos I'd like to put out before that. And that is it for this video. So I want to thank everyone for watching up until this point. If you liked the video, hit that like button, and please remember to subscribe by hitting that button on the right hand side for future financial videos. My resource page has many free stock tools to use to get information and screen for stocks. If you have other pages that you like to use to screen for stocks, go ahead and leave that in the comments below. And if you want to get to the resources page, there's generally a link in the description below, or at the end, or in the cards. If you have any questions or want to just say hello, please leave a comment and I will always reply. Thanks for tuning in, and I will see you next time. Bye.